Welcome everybody. Thank you so much for joining us today. We're really excited to have you joining our panel discussion on building global startup teams. I think it's a great topic to be talking about in the current environment, and I'll talk a little bit more about why we actually think it is so relevant and why really historically I think people will actually look back at the COVID period as being a really pivotal one in terms of not only how people work within country and the whole remote versus office environment, but also how we work globally as well. All of these sessions, we want them to be as interactive as possible. So I'd love to actually find out where you're joining us from today. So if you can drop that into the chat today. The format for the discussion today, we'll wait a couple of minutes until a few more people actually get onto the call. And then once we actually do that, we'll actually get the panelists to do a brief introduction, and then we'll actually have some Q&A, pretty informal through the session. If you have questions as we're going through that process, please drop them in the chat. We'll be checking on that and actually attempting to answer them as we go through. And we'll try to leave about 10 minutes at the end where we can actually just open it up for Q&A. I am super excited to have the panel that we have today. Like, not only do you have a panel that consists of people that are actually helping literally thousands, if not tens of thousands of startups build global businesses, right? So helping many other people across the whole startup ecosystem. But everyone on the panel today is also part of and playing a key leadership role in a global organization. So you've got that unique perspective of not only are they actually working in global teams and playing key leadership roles in building those, but also helping literally hundreds, if not thousands of other startups build global teams as well. So that's awesome. We've got one of our panelists today, Daniel, I think will be joining us in a little while. Just hang on and he'll be on shortly. Just a brief introduction to myself before I hand over. So my name's Callum Davidson. I look after partnerships at Cake. You know, we are in a very privileged position where we get to help, as I said, thousands of startups with building global teams, and in particular, being able to actually allocate equity across their global teams, but also help them streamline their capital raising as well. And as I said, we're very much globally focused in terms of what we do. So our original market was here in Australia, but we're operating across all of the major startup hubs, including Southeast Asia, in particular Singapore, the UK and the US as well. Jace is our co-founder. He'll talk to you a little bit more about it in a minute. But with that, I'll now hand over to Leesa. Maybe Leesa, you can do a quick introduction for yourself and then we'll go from there.
Yeah, hi, good morning, good evening, and good afternoon. I'm Leesa Soulodre. I'm the General Partner of R3I Capital and the founder of the R3I Ventures Group in our House of MedTech and House of DeepTech. I'm also the privileged partner of She Loves Tech in about 26 countries around the world. So really happy to be with you here today, and thanks for the invitation, Cal.
Thanks, Leesa. Bevan?
Yeah, g'day everybody. And first of all, thanking Leesa for joining us at 3 a.m. her time on this call. Just wanted to make that point known.
Wow, yes, round of applause. Thank you, Leesa. I did a 4 a.m. last week, so you've got me beaten by an hour. Well done.
So yeah, my name's Bevan Stevenson. I'm the Global Alliance lead here at a company called Deel. We're a 3-year-old startup that has grown to over 1,000 people globally. How have we done that? We've basically used our own technology, which is what we classify as employer record, to employ people in multiple jurisdictions. So over the last 3 years, we've helped over 8,000 companies go global. And we say, you know, the worldwide workforce is available for every company to hire people from right here, right now.
Awesome. Thanks, Bevan. Jace?
So cool. No, I'm really excited to be here. Great panel. Thanks, Cal, for putting it together, and Gabby. Yeah, so I'm one of the co-founders of Cake. Cal already did a really good intro of Cake, so I won't double up on that. But yeah, so I guess I'm more accounting and finance leader in the past. I've been now working in the tech space for 5 years. I've run rounds, I've been building teams, I've been studying equity plans, and now we're helping global teams with their equity plans, which is really exciting because it's really bloody hard. And so we're really happy to help, all of you guys as you scale, to be able to use your equity to your advantage, as you're building these global teams and taking advantage of this opportunity. So yeah, happy to be here and share.
Awesome. Daniel, just in time, we're just doing intros. So do you want to give a really quick intro for yourself and Sleek?
Yeah, of course. Sorry for banging back, guys.
No
so
problem.
yeah, Daniel, been in Singapore 4 years, helping to run the sales team and customer success team for Sleek. We help to register businesses in Australia, Hong Kong, Singapore, and the UK. And then the other side of my job is helping to maintain the companies in terms of their compliance, so ongoing. So very simple. And our clients are mostly startups, entrepreneurs, and investors. Awesome.
Thanks, Daniel. So just to, I guess, kick off the context for this for the discussion today, and there are pivotal moments in history where there are some seismic changes in terms of the way that we operate in the world. And if you look back at World War II, that was seen as a pivotal one, for particularly from a workforce perspective in terms of women entering the workforce. I think the stats are there was something like 6 million females entering the workforce at that time, whereas beforehand it was very different in terms of their roles. And we're still going through the revolution of actually having more females entering the workforce and inclusivity in that. But certainly COVID, one of the things that's been said about it, and I think it is really enabled, is this remote first ability to be able to actually really be anywhere, not only working outside of the office, but working anywhere globally and be
working
part
in your
of
pajamas. It. Sorry, Cal, working in your pajamas, working in each other's bedrooms. Like it's been a.
We've seen it all, right? And you've all seen the memes where people are on the toilet and they're doing the Zoom call and all that, right?
Oh, mate, you've gone too far there.
But I think we will look back at this and say, look, this it was a catalyst for a seismic shift in the way we can work and the way we do work, and it's not only driven around the employer's ability to be able to actually leverage technology to do that, but also the employee's desire to be able to have flexibility and really work wherever they want to work. So with that, it's one thing to actually say we want to do it. It's another thing to actually do it in practically and actually understand what's actually required, both from a logistic, a compliance perspective, paying people, but also actually maintaining all of the good stuff that you need to build a really high performing startup team, maintain that culture, maintain that motivation, etc. So we're going to dig into that today. I'd like to kick it off. I might throw it over to you, Leesa, just to actually talk about, what do you see as the kind of a couple of the main drivers that are actually really driving this trend towards more global teams?
Yeah, I think the first thing is the pandemic really put us all to 100% digital operations, right? And even those heavy industries that were very legally and regulatory compliant in terms of having to have physical people on site were able to adapt. Think about venture capital. I couldn't get allocation from an allocator unless they physically came to my location for them to be able to cut a check. And almost every institutional allocator that I speak to in the world now can cut a check without having to physically come to my location. They still need to, once they've cut a check, at least once a year to make sure I really am who I am and the like. But I think there's been a lot more trust placed into the digital ecosystem. And I think the other key point is that we're here to serve customers at the end of the day. And when you ask your customer, what is your desired customer experience? Almost every customer says, I want local contact. And so in order to provide local contact, we need to expand our team to enable that customer experience. And we were just stuck in a world of great global immobility. And so even if you wanted to be an international team, you literally couldn't fly in, fly out like we would normally. And so we've naturally dispersed. And then the last one is around competitive advantage, right? How do you get competitive advantage in a global economy? Well, the first one is you either dominate your niche and you just do that, and you do that for as many people in your market as you possibly can. And usually that requires no product market adaptation in order to get that rapid concentration. And so you generally often stay local before you really go out to the market. But now today, many companies are software-based entities, and they're expanding globally overnight while they're sleeping. And so where the customer goes, so too do you. And as a result, even in the great age of immobility, we've had to expand that customer footprint naturally. So I think that's been a large part of the driver. And then coming back to gender equity and inclusion, I think this Me Too moment that blew out of the US has blown across the world. And I run a gender lens fund. It means we prioritize women in deal flow. It doesn't mean that I only fund women. It just means that I'm going to have a positive lens to inclusion of women in my pipeline, right? And when I back a company, it's really interesting. I'm a signatory to Beyond the Billion, where we've mobilized 2 billion to allocate to women, because women only get 2% of the allocation of capital. And what's really fascinating is that around the world, with all of these venture capital partners stepping up to back minorities or women, there is this movement to support women across the globe, because not every unicorn comes to the US. 15% of them are women and 51% of them are born outside of the US. And so also they're chasing opportunity, and they need to demonstrate that they are compliant to these new trends and these new practices.
Yeah, great. Fantastic. Jason, coming from Australia as a beachhead market for cake, it'd be great to actually get your perspective on it as well. And Australia isn't a huge market, so it'd be great to get your perspective on tapping into some of those overseas markets as well.
From a founder perspective or from a cake operating perspective, I mean, as a founder, like Australia has some big markets, but not a lot. And, we really wanted to work with startups. And so we had done a great job here in Australia, and we thought, let's go find lots of other, great startups to work with all around the world. Obviously comes with a range of challenges. And we're still learning. Certainly, as Leesa said, we're learning about the different cultures, the different needs of the market, which markets really want, to have people there, which markets are happy to work more digitally. So I think one of the biggest lessons we've been having is that, most markets have their own difficulties and differences, and this is a really, important part of expanding. And I guess how that works with global teams is, not only can you tap into people that have this experience already looking outside of Australia, which is obviously a wonderful advantage when, you've got to move very quickly, you don't want to be spending money on things that you shouldn't be spending it on, because, it doesn't last very long if you make a lot of mistakes, right? So first of all, accessing the right talent that have the experience to allow you to move fast is critical. And I think, the second part would be to, again, as Leesa said, finding people with the expertise, with the awareness of the market differences and the cultural differences, to help you have those successes. So, it's been a really exciting year this year as we've expanded. We've learned a lot, and I think Cal, now what are we now? We've got about a third of our team sort of here on the Gold Coast.
Yep.
We have another few around Australia. We have a team in Lisbon, and then we have some remote crew as well. So it's been a really exciting year from that perspective, and looking forward to learning more. We've been recently talking about having on Fridays, we have whichever country we've got our most recent customer in, we would then dress up and do something from the culture of that country to help build it in and make it fun. So these are, I guess, some of the things you can do to benefit from the cultural diversity as well.
Awesome. And Bevan, Deel's a little bit further down that track than we are. So what are you seeing in terms of what's really driving this trend, and then how's Deel cope with that real global expansion and global team?
Yeah, it's a great question. I'll probably come at it from a different lens from both Leesa and Jason there. So just a little bit more about my background. I spent 15 years working in the recruitment industry here in Australia, predominantly supporting technology companies that were coming to Australia for foreign expansion. And the biggest challenge a lot of those tech companies out of US, UK, Israel was incorporation, establishment, setting up a legal entity, the cost associated, the time that it took to then be able to start building out commercial viability or proving a market that they could potentially go and work in. So just because we've got a great product in the US, does it localize in Australia well? And I've seen over that 15-year journey, so many companies burn so much cash and fail in new markets as they try to enter, just because they go global. So I think the strategy for global has changed dramatically as we sort of move into this rise of entrepreneurialism phase. What does that mean? We've come from sort of this gig economy contractor world that's been happening for the last 20 years. You know, the gig economy, the contractor world, it's been out there and people have been working independently outside of the four walls of big corporate industry. You know, pre-COVID, what COVID changed from a seismic shift point of view was that workplace dynamic where people were going to work every day. So that seismic shift from COVID changed people's workplace dynamics, saying I can work now remotely, I can work from a home office, I can work from Bali. So it gave freedom for people to think about the workplace that they were now going to work and operate in. What did that open up? That opened up the door for what we're seeing now as what we call the rise of the entrepreneur. So as the next 10 years we fast forward, we're seeing this seismic shift to entrepreneurs that through PwC reports and others that I've read have said that startups alone have the ability to contribute over $100 billion to the Australian economy in the next 10 years. Furthermore, contribute over 1 million new jobs. So if we look at that and think, okay, so where have we come from? We've come from industrial revolution, big corporate offices, big hierarchical structures, set up corporates, set up structures in different countries. Now to these hyperscale entrepreneur style businesses, it's about going global to get, investment return, obviously to Leesa and her companies, but furthermore to build a really global footprint so you can open up that diversity and inclusion conversation where you're hiring people for different cultures, different religious backgrounds, which then integrate into your company, which builds your business and your values really strongly. So that's sort of how I view things. What are we doing at Deel to enable that? We've got the technology that allows startups to compliantly hire people in 160 different jurisdictions without the need to incorporate, without the need to go through that laborious process to invest in a market before you've even proven where there's a market to service. So that's where our business has sort of been working for the last 3 years. And again, the confidence we've seen in market, our business has grown from $1 million revenue to 120 million ARR in less than 18 months. So that shows the appetite from the startup community to use technologies such as ourselves, as well as the guys at Sleek that can enable companies to enter new markets really quickly without all that incumbent structure.
Awesome. Great segue. Daniel,
how about that growth? How about that growth, eh? Whoa. That's some unbelievable growth. Well done. Sorry, Cal.
No, that's fine.
That must be a hell of a chart on the deck. Like our chart's pretty good, but like that is some like legit vertical.
I think the other humbling thing is, the business can operate on technology, as Leesa said. It's about digital technology to enable global teams now. So we use Google, we use Slack, we use Notion. That's how a business operates. We don't have thousands of technologies that, we need process and policy built around. We build our business on the technology we need to service our customers the best way. And that's really how we operate. It's amazing.
Yeah. Awesome. Daniel, over to you. Anything to add in terms of what's driving the trend to global, and then how Sleek are actually playing into that?
Yeah, no, I think there's been some really good points covered. I think if I maybe talk from our own perspective as a company, Sleek. So I joined 4 years ago. We were less than 20 people, and now we're 380 people, like 4 years later. And I think the people that we've hired internally, so they're all our own staff. We don't use contractors, but they're based all over the world. And so a good example of that is we were looking for someone that was good at SEO and SEM, so search engine optimization, and we struggled to find someone in Singapore to do that. And so the guy we found globally was actually based in Serbia, and he's a gun. He got us to page 1 of Google within like a few months of joining. Organic search went through the roof. So if we had just settled in looking for someone in Singapore, like one, it would have not been the right fit. We would have just settled for mediocre candidates that we were looking for. So he, for us, was amazing. And also, as has already been shared, he brought a new diversity to the marketing perspective, which was really interesting, because where you grow up and where you go to school and the tactics you learn, you're very biased by your education. So bringing in new people. So the marketing team now, I think we're hiring like 15 more people this year. And we're going to have a diverse team spread throughout the world, which will help us as a company to target and to do that effectively, customers or leads from every market, every culture. So I think that's a benefit of having these global teams over just a homogenous team in one country that all thinks the same. tries the same tactics, and has the same education. So I think that's one point. And I think the other perspective is from our client side. So as Bevan shared, we help companies to register if that's part of their strategy, to set up an entity all online, quite quick, quite affordably. But then they need staff, because a business with a bank account without any staff doing anything is quite pointless. So again, they have the same struggles. Where do they hire staff from? Where do they identify talent to fit not only their budgets, because again, most of our clients are startups, but also the needs that their unique businesses have. And some of them are quite niche, some of them are regulated. And so again, they're looking globally for that. And it always comes down to, okay, if you find the right person, how do you hire them? How do you pay them? And how do you make sure that you keep compliant with all the taxes and everything that's in the markets that they're in? So I think, yeah, it's a great topic. It's endless in terms of the discussions we could be having on this.
Yeah, awesome. That, I guess that one of the points that I did want to cover is, so, and probably a nice time to tap into it now, Daniel, is like, so what are some of the key considerations people do need to be thinking about when they're looking to hire offshore? So you covered a little bit of that, but it'd be great to get a little bit more color on that, and you know, how an organization like Sleek helps fill some of that. And then also after you, I'll get Bevan to actually be great to actually hear about that from Deel's perspective as well.
Yeah, of course. Well, like I mentioned, like for me in my sales team, I have a colleague based in France, in Paris. And so again, I have team members based in the Philippines. We have team members in Vietnam, in India. So every country is very different. And again, our head of HR sits in Singapore. But we also need to be aware that they are employees, and we still need to give them benefits to check in emotionally how they're going. I think one thing that's come with this global workforce is you still want to feel part of the team and the culture. You still want to feel like you're valued and you're heard and you're seen. And I think if you're in an office every day with the same people, you have a lot of fun, you're there. But if you're isolated working by yourself remotely, you need to put in place different strategies to keep people motivated, and also to feel like their contribution is actually meaning something. So that's part of it. But also at the same time, you need to make sure you're paying them correctly, you're taking care of the taxes, because otherwise, if you don't do that, then if you're their employer, then you're the one that's getting in trouble for that. And often the people you're hiring have no idea about that stuff. They're really relying on you to do that for them. So I think that's, again, why Deel, I think what Bevan and his team are doing are great, because they take care of that hassle for many business owners who maybe don't need to set up a company in, say, France or in Philippines or wherever else their companies are based.
Are there any particular things that you see maybe startups not do properly when they're looking to expand into a new country, Daniel? Are there some common areas where you just go to some tips you can give people, make sure you cover this off, more from a logistic perspective, I guess, you know?
I think it's important to meet people if you can, because that's a good way to do the check to see whether they would be a good fit within your culture. I think probation periods are great because, again, you can test whether someone will be a good fit, and if not, then that's just life. It's good to have those in place. I think as well, for a lot of our clients, because they are startups and entrepreneurs, they don't have a lot of money at the very beginning, so they enter into agreements such as employee share option plans, ESOPs, where they give away percentages of their company to, particularly in tech, because everyone needs tech these days. And to get the best tech people, you need to pay them a lot of money because they're in demand. So I think another risk or thing we see is people sometimes give away too much of their company early on to get tech in. And the people they bring in necessarily won't be there for the long term of their company. So it's good to talk to other founders to see what strategies they're using. But I think those are just some obstacles that we see is getting the right cultural fit, and then how do you hire the right people and incentivize them to join, particularly when you're at the lower end of having a lot of revenue and sales to pay someone a high wage.
Yeah, awesome. And Bevan, yourselves, how are you helping the organisations get through and hire and build those global teams?
Yeah, look, from my point of view, I suppose is, look, we're not a recruitment company. I'll get that point on the table early. So some companies do come to us and think, because we can help hire, compliantly in multiple jurisdictions, and actually think, okay, well, these guys can find people for us. But we're not a recruitment company. We've got a talent management ecosystem that we partner with. So very much building that continually to find best of breed recruitment partners that can support our clients to source the talent in countries exotic such as Brazil, Costa Rica, Nigeria. I was talking to a client yesterday, we're looking Philippines, other markets. So I think that's the biggest challenge with startups, and it's coming back to the point of where are they at in their evolution of growth. A lot of them are in that seed sort of Series B capital raise range from sort of 1 million to 10 million. They're looking to get gaslit for some investment. The capital comes hard. They need to go global quickly. They need to hire people in multiple jurisdictions. They look to the Western markets for hiring people first: Canada, Germany, US, UK. These are high capital invested markets. So from a business perspective, you're going to pay big cost to hire people, and it's going to cost you a lot of money to trade and operate in those markets as well. So what we're trying to do at Deel is try and shift the focus away from those big capital Western markets to look at, what we say, sort of build tiger teams in lower cost markets where you can operate from as well. So let's talk about Canada to service the US. Let's talk about, Malaysia or Vietnam to service Southeast Asia rather than Singapore. So these lower cost markets to enter your business into, to operate within the time zone, build market viability from those places, and then decide to enter those bigger capital markets once you've proven revenue streams in those areas. So I think that's what we're trying to advise a lot of our clients to do, because again, there's nothing worse than burning somebody's money really quickly, and you haven't proven a market out. So we want to make sure the startups that use Deel are going to go on to incorporate and establish big teams across the countries that they operate in. Also, we want to make sure the VC money that comes in, there's a return on that, so we can continue working with the portfolio companies within those VC companies. So we want to enable companies to be successful as part of their growth strategy, not just sell them our solution, but actually help them scale and grow their teams.
Yeah, awesome.
And Cal, I'll just touch on the equity plan side of things as well, just for those people so they're aware of some of the complexities. So we didn't come across this initially at Cake because we're very focused on Australia, and there wasn't so many Australian companies looking offshore. But then I guess as the acceptance of ESOPs and the expectation of employees to get equity became more and more common and prevalent internationally, it's become like a really pressing need. But it's not just as simple as sending an offer letter out from your existing ESOP to all these different countries. Unfortunately, sorry to share this with you, each country has their own rules around legals and tax and valuation and reporting. And as a company, you have obligations on your side in the country that you're in, and you have obligations on the country where the employees are. So just be aware that is the case. A normal way to do it would be to get sort of a lawyer in each country, or a tax advisor in each country. They're going to write you a separate ESOP for each country, and it's going to be like a massive headache. So Cake has essentially worked this out so that it's much more streamlined. You don't have to have an ESOP for every country. You can have specific offer letters, that help you be compliant, no matter where your employees are. And as I was saying, right across all these, countries that perhaps weren't so used to getting equity, now they're looking at all the other companies, they're getting equity, and they're getting equity in Vietnam. We're in Malaysia, why aren't we getting equity? So this is all happening very quickly. And, so just be aware that complexity is there. And, if you need to talk to someone about that, we would be, good people to come to. Yeah.
Awesome. Thanks, Jace. Leesa, I think you're muted. Sorry.
Yeah, thanks, Cal. I just have to say I vouch for all of these services because we build our company on these services, right? And, our digital deal desk in Singapore, our entire global operations runs out of Sleek. And we've set up replica platforms in the US and in the UK because we had such a great experience with Sleek. ESOP is a big deal, and it's not just a big deal from the employee side. Of course, it's a big deal from the capitalist side, right? As you cut a check and wanting to make sure that people have enough incentives to stay in the game. And I just love the way that Jason and his team are capable of providing a plug and play solution. You just don't have enough time as a founder. You know what it's like. You don't want to spend your time on administration. And in turnaround situations, which is now where there's a lot of pressure on you getting to, break even and EBIT yesterday, there's a huge focus on indirect costs. And so there is a lot of pressure on you doing things super efficiently. And the more you can turn around and show your stewards of capital that you're making smart, capital efficient decisions for the company, the better off you're going to be next time you go to get that re-up and you want to expand further. And so it's all about building trust. And the fact that you are all digital vendors, providing me with very, very strong corporate governance in what are very young corporations, really sets them up for success, right? Because it's 100% transparent and you're operating in some of the most untransparent markets in the world. And I think there's nothing more priceless than that.
Thanks, Leesa. Is there anything, we're obviously in some really interesting times at the moment. Equity markets are down, geopolitical risk is going through the roof. Access to capital is becoming tougher. Is there anything in there that's actually changing, how people go global, their desire to go global in the startup space?
Yeah, I would say the biggest mistake that everyone makes is that they turn up in Singapore and they think they're going to raise money. Yeah. And they think they can fly in, fly out. Same in the US. Unless you've got substance in that market, unless you're physically there to be strangled down the road, like literally people are not actively cutting checks if they don't know you. And so I think we just have to be very pragmatic at this moment in time. I don't know a single VC cutting a check in the next 90 days. September is when perhaps the markets will hopefully have stabilized by then. That's kind of the date in everybody's diary. But up until that point, everyone is just focused on existing portfolio and focusing on the winners. Literally, the VCs that I talk to, if you don't have the runway, you're being left to starve. Find your own way, right? And so these are capital-starved moments in time. And I guess one of the key things that I would say is if you are raising capital, venture capitalists, they want to see the movie, not the film clip. You fly in, fly out as a film clip, right? We want the movie. And so we want to meet you, we want to monitor you, we want to see you over time perform under these stressful situations. We want to see how the organization comes out the other side. That being said, 2021 was a rocket year for raising capital. And so there are a lot of people with money to deploy. And so the natural position when you meet a VC is that they want to say yes, right? But there's a whole governance ecosystem on the back end, and the fact that we are stewards of capital for our limited partners. And so there is a fiduciary obligation there that we have to fulfill. And so I think also we want the re-up, just like our founders want the re-up. And we want to make sure that we're going to get that fund 2, fund 3 down the line. And so I think everybody is trying to show that they are good stewards of capital, both on your side, but also on ours.
Awesome. Bevan, do you have anything to add to that? Yeah, I thought you might have some good perspectives as well.
I've got a question for Leesa, and I've always wanted to ask it to somebody in VC. I've never had the chance to, Leesa. So I know this is off the cuff, and hopefully it's okay. But I was sort of part of the evolution of the pre-IPO phase, when technology companies came in 2008, sort of back of the GFC, where capital was low. People didn't want to give up, a lot of their capital for salaries. They thought, right, let's offset it with equity plans. That was a good way to oversell, the role, get people into tech companies, give them a 4-year runway vesting plan. So my question on the back of that is equity seen as a value add to the VC companies that are giving funds out, or is it seen as a cash burn? How's it viewed?
I mean, at the end of the day, it's dilutive, right, to any VC coming in. But at the end of the day, we need alignment of incentive. And so my job is to keep you as my founders motivated, energized, and satisfied, and to keep that team cohesive. And if it's going to take equity to do that, then it's going to take equity. Yeah. The cost of capital is getting higher. And so what is cheaper? Is it equity or is it capital? Yeah. And how fast can you get access to that? So often equity is just the most efficient way in which to deploy for many founders. And I think the other point is I want my team to be an equity stakeholder. I want them to have a piece of this because, man, we work our backsides off to get this company to where it is, right? And I'm sure your team are just as inbound into your company. It's their company as much as it is yours. And I think people want to build that sentiment into the fabric of their organization. That is the glue that binds that company together as it scales across borders, across markets, and across stages of capital. And so I don't think any investor is ever going to deny the company that privilege, right? Because that is the glue that holds it together.
Yeah, great to know that. Thanks.
Bevan, are you seeing, what are you seeing from Deel's perspective in terms of, are you seeing acceleration of people, in the current environment, looking for global options in terms of hiring? Is it, or has there been a pullback in that, just with a tighter economic backdrop?
Yeah, look, we're fortunate. We sort of move in two worlds here. So, we move and have done so for the last 2 or 3 years, which is most of our growth has been on that go global message, which is, companies that have been gaslit with investment to go global as quickly as we can. And we've got some amazing domestic Australian companies like, Linktree and SwiftX and RideZumo and, Liars, all these companies that have been Australian domestic companies have now been given investment to go global. So we've been a big supporter of that sort of seed to Series B round, you could say. As the investor sentiment slowing down, as Leesa says, to August, there's going to be a slowdown on that type of capital investment for going global, because again, it's about maintaining sort of status quo rather than taking risks. What we're seeing is the second lever is now retention within companies. So as the borders are opening up, we're getting pushed up into enterprise conversations because now there's a mobility services challenge. What does mobility mean? I'm a company that's got 50 staff that are expats that want to return home for extended periods of time. So to lose 50 data scientists out of your business because they want to return home to India for 6 months and I can't facilitate payroll to them, that's massive business impact. So the dynamics of our business is shifting just with the sentiment of where money flows and where human capital flows. It's now going into an enterprise conversation because that business impact, people leaving the Australian companies or companies here to go and return home, there's no hiring back into those roles because that's the biggest challenge. So we're now working with a lot of enterprise businesses in that mobility conversation and trying to bring Deel as a line item into a work from anywhere framework or policy that a lot of those businesses are building.
Yeah, okay.
Excellent. I have a question for you, Bevan, if that's okay, Cal.
Yeah, go.
A lot of pressure on even us to give unlimited holidays, right? This notion of unlimited holidays that was born out of the US that I don't even know if culturally people ever really used it, but it was given as a perk nonetheless. Have you seen that implemented through your organizational infrastructure? How would you execute that on a platform like Deel? How does that play out? And secondly, when you think about mobilizing a team that was once located in Singapore back to India, if they're back in India, I don't want to pay Singapore prices. So how do you address that notion as well?
Yeah, it's a great question. Yeah. So all of the above we sort of address from Deel's point of view, and let's talk about the Ukraine saga to start with. That's been a real pivotal moment for Deel's business to really look at, I think we had 4,500 contractors in Ukraine that were paid under Deel contracts that were mobilized immediately out of Ukraine and different countries, and we had to facilitate support to them, so payments, funds, whatever it might be, to those Ukrainians. So fortunate we had things like virtual cards. So on Deel's platform, we've got virtual cards, which are USD currency, meaning that's stable currency, so we could help Ukrainians move and transfer funds from bank accounts into the Deel virtual card, and then we could continue facilitating funds to those people. So that's sort of one scenario where we've been able to act quickly and support. But I think, as companies now are looking for different ways to attract talent, retain talent, the ESOP plans and equity plans are an attraction for coming in, but it's about benefits for companies that are working in your business that are really more important now. At Deel, we use this really cool platform called Roots, which we acquired recently. It's a platform that sits on the back of Slack. And basically what you can do is you can then set up paid time off, and you can start tracking, benefits associated to your team members wherever they are in the world. If they want time off, at Deel here, we have an unlimited PTO, unlimited paid time off. So we've got benefits like that companies are starting to look at now as they have remote workforces or people that are mobilized in different countries. How do we then provide those benefits? How do we enable it? But then how do we track and measure it through technology and processes as well?
Awesome.
Did that answer your question?
Yeah, I think I'm going to become a Deel customer in 30 minutes, as soon as we get off this call.
Yeah, Roots is a cool little tech. It's just built on the back of Slack, and it just sits on your Slack platform, and you can just do referrals and pay time off. And it's a cool little HCM tool that sits on Slack. So,
I guess amazing. No wonder you have that growth, mate.
Just continuing on that theme, like Jace, do you have, we talked about building global teams and recruiting in that, but it'd be great to just spend a little bit of time talking about how do you get the most out of them, make sure they're high performing teams, etc. Do you have any particular tools or tips you think are super important for actually, running and maintaining those teams?
Yeah, so obviously we've got a diverse panel here, so I'll stick, I guess, with the ESOP and equity aspect just to give people, I guess, some clarity on how you can utilize that, to help, with retention, engagement, alignment. There is quite a bit you can do. I think, in these times where there's a little bit more insecurity, you can have people getting scared, morale can get hit a little bit if there's cuts. And so you do need to be on the front foot, trying to bring as much positivity into the communication and the culture, as you can. So the sorts of things you can do with your equity is, reiterate what their options are worth. People can be scared. What are my options worth? Are they worth nothing now? And don't underestimate how little your team will know about their ESOP. It's so complex, it's so scary. No matter how many times you talk about it, they're probably still not really going to understand it that well. So yeah, just talk about valuation, talk about any potential exits, talk about what the value of the options can be if you hit your goals. So talk about things in the future and how we're all working together, to create an asset for a lot of your team members, especially if they're in their second or third or fourth year of their ESOP and the company's had like a few good years. Even if this year's been a bit of a bad year, don't forget last year was like the best year ever for valuations in the history of the bloody universe, nearly. So, a lot of people are still, their options are like their biggest asset, maybe except for their house, right? So just be aware that this is important to them. It could be a big part of their wealth. Give them clarity about where they are now, where they're going. We're all going there together. I think that's really important. Additionally, now we're all being correctly, due to the market risk, under pressure to operate, more on break even and perhaps even profitably. Crazy word to hear in tech, but healthy periodically as well, of course. And therefore, profits can equal dividends. And so if they've got options, talk to them about what they can do with those. Can they exercise them? If they do exercise them, are they going to be getting dividends? Quite possibly they will be, with some of our companies. So just make sure you're connecting, all the numbers together for them. Use your all hands for things like that. I think that's certainly one way. And then there's some really powerful levers in your ESOP. I touched on one there. From a retention perspective, just think about, you're in the third, fourth year of your ESOP as an employee. The amount of options you're getting every year could be a very material amount. It could be half your pay. It could be, equal to your pay or more, depending on how good a few years you've had. So, this is a wonderful asset. Be aware which of your team members are in that situation and which aren't. And that's actually, quite an important thing to do with your HR and team planning. And perhaps you could start to build in some milestone-based vesting. So, perhaps you can't do pay increases this year, but could you have a new option grant, which is specifically tied to some short-term goals, that the team is trying to hit. So, there's some flexibility around how you grant options and how, your team earn them as well. So yeah, there's a few tips, smart ways to use your ESOP quite tactically. And just to make sure that the worst outcome, as we were talking to before, is that equity goes out the door and your team doesn't really understand it. They're not aware of it. They don't get the value. They're not engaged and motivated and retained. That is the worst possible outcome. So please make sure you're communicating really well around it, that you understand it. If you don't understand it, talk to Cake or talk to whoever's running it. Make sure you understand it first, because quite possibly you don't. And I'm not trying to criticize, it's pretty full on. Get a handle on it and help your team get a handle on it. It's a big asset for you.
Great, thanks. Daniel.
But Jason,
sorry, go,
I was just
Leesa.
going to say that is a question for Daniel, because Singapore has never been a market that really recognized anything other than cash. Has that changed with some of the unicorns in region? Are the parental pressures off these kids now, to not necessarily deliver cash, but to look after the family's equity pool?
Yeah, no, I think it's interesting because again, we have a lot of SPVs being set up, particularly because companies are now giving away equity as has been shared. And so in Singapore, when you have more than 50 individual or corporate shareholders, you become a public company. So what we're seeing is more companies being set up just for the purpose of ESOPs and giving equity to then invest back into the main company. So we are seeing an increase in this. But I love, Jason, your phrase just then. The worst possible outcome is the equity goes out the door where employees don't understand it or are motivated by it. I think that's really key because I think
that's pretty scary. Like if you're a $20 million company and like, you know, $4 million of your equity is in an ESOP or whatever, and like nobody really gives a shit, like please don't be that founder. Like, so yeah.
I think, like you showed, like you can use it really strategically. And if you're a founder or an entrepreneur giving it away, but you don't even understand how to sell it or to present it, then that's a huge concern. And then the people receiving it, if they have no idea what's going on or how valuable it is, then again, it's what's the point?
I've seen it firsthand. Like you go to all the effort and you give a really clear instruction and you give an FAQ and then they go, is this a tax thing? You know, like, is this being deducted from my pay? And you're just like, oh, okay, well, we need to take a bit more time with this. And so that's, you know, even us at Cake, like, so it's very valuable, but yeah, the communication piece is pretty critical. Yeah. Thanks for helping highlight that, Daniel.
Yeah, but maybe a question for you and Cal, because again, it's always interesting to know at what stage should founders or entrepreneurs come to you guys to chat about ESOPs and equity and have that like dumbed down, simplified explanation of what it's about. Because again, some people think they don't do that until later down the stage of their company, but when should they be engaging with you guys?
Well, I guess for me, it comes to, are you prepared to build it into the culture of your company? Are you prepared to understand it? Are you prepared to really extract the value out of it? If you are, I would normally suggest to do it on day one, because it's so hard to get that first round done, and getting access to any capital is so difficult. But just say, for argument's sake, you know, seed round, $5 million company, you take 10% of your company, that's $500,000 that you've just pulled out of thin air, which at that stage is like one of the most difficult things in the world to do. Now, to utilize it well, you know, to incentivize, you know, part cash, part equity for pays, and to get your advisors set up and to get some sweat equity and to get those hires and, you know, to balance that all out, it isn't a simple process, but, you know, it's a lot of capital that you can sort of get going right from the very beginning. And then I think once you learn to use that equity in that powerful way with attracting and incentivizing, you know, and motivating people in the right way, you know, I think it puts you on a path, you know, to help you grow your company and your team in a more powerful way. That's how I see it. But I think unless you believe that, unless you want to communicate that, unless you want to like really build an ownership culture, I think perhaps you're gonna miss the mark with it, and it's not going to be as valuable for you and your company, and you might fall into that category of accidentally like giving away a chunk of your equity and having it be quite a bad outcome for everybody. You know.
I think the VCs are actually, even early stage VC investors are actually starting to actually get more clued on around this as well. And you know, historically 100%. They've said, oh, well, you've got to allocate your ESOP pool because I don't want to be diluted by that. So that's been the default position, right? But increasingly, we're seeing them say, no, not only do you have to allocate it, you need your ESOP set up properly, because there's a chunk of capital there. If you're not running it properly, then you're actually diluting all of us and you're not getting value and an appropriate return on that capital that you're giving away. And so we've got, you know, people like Wavemaker VC that we're working with. There's, you know, part of their DD process is not only do you have to have it allocated, but you need your ESOP set up properly and be using that before we'll actually invest in you. And they're investing early. They're investing seed stage companies, right? And they're one of the biggest investors in Southeast Asia, but also into the US as well. Massive portfolio there. So I think we're seeing more and more awareness come through around that. You know,
really quickly as well, and just to like, you know, I guess support Cake a little bit. Before Cake and, you know, people like Cake, ESOPs were an absolute nightmare. They were so complex. They took so long. They were so badly implemented, like from a legal, technical perspective, let alone from the cultural and communication perspective. But now it's actually doable, affordable, happens fast enough. You can communicate, you can keep it up to date. And so we really have been able to shift the whole paradigm about what it is and how it is to make it totally doable for earlier stage companies. I think why it used to be done later was because it was just so expensive and hard to manage. Like to be able to afford it, you needed to be at that scale. But, like a lot of things with technology, we've been able to really make it much more approachable and affordable, for many more companies.
Guys, do you mind? I wouldn't mind asking a question to the group as we sort of move forward with new currencies in the world, and not to get into the deep dark secrets of crypto and blockchain and all that. But on Deel's platform, we've got an enormous demand from certain parts or certain regions for payment to be made or withdrawal funds to be made into cryptocurrency. So I suppose my question is, cryptocurrency NFTs, are these going to tokenizations? Are these going to be part of sort of ESOP plans in the future?
I think it's quite possible. I think from a technical perspective, the shares are normally registered with, say ACRA or ASIC or Companies House or whatever, but the options are normally not. And so there is a slightly lower level of trust when it comes to an ESOP versus the shareholders. And I think that, having a blockchain or a tokenized based system could potentially be a way to increase trust and transparency, especially globally. When it comes to equity plans versus shares and where exactly you fit on the overall cap table, I think there's potentially some opportunity there. Like you, and especially doing what we do, we've always got one eye on the crypto space, seeing what's working, what's not. Having tokens sort of seems to be still very separate to actual equity, mainly just due to the regulatory environment and the regulatory risk and the appetite from ASIC and the SEC and organizations like that. They haven't quite got there yet. I think there's big tax issues, CGT versus income. So I think that the regulations are still a bit too hectic. But I also think as these things evolve, it's very likely that it'll become more and more aligned.
Yeah, makes sense.
Maybe just to share, I was a co-founder of a healthcare robot as a service company in Shanghai. We went live with 210 million elderly subscribers in Shanghai with two of the biggest insurers in the world. 2017, 2018, we launched in 2018 in Hong Kong officially, the big launch. And we had a $2 million line offer from LG, or we had 87 Russian Bitcoin. And my co-founder took the 87 Russian Bitcoin, much against my desires, because I couldn't bank working capital on the back of crypto, right? I lived in Singapore. It was just not possible. And so I think if you want to keep people motivated, like that day, I was a board member as well, like 3 of us left as soon as that Russian Bitcoin poured in. And I sat in my ecosystem in Unilever Foundry in Singapore, and a ton of crypto companies came into Singapore at one point. And I watched people in what is now one of the biggest crypto companies in the world who'd been given tokens, but there was never any documentation, there was never any governance around it. And of course, that company became a multi-billion-dollar crypto company, and all those early employees got nothing. So there's just been a lot of fraud and a lot of just poor behavior, I would like to say. Daniel, you probably have some very strong opinions on that. I was really delighted when the asset managers came into the crypto ecosystem, where corporates could actually park their assets and you started to get some transparency and digital transformation of the governance. I think it's fundamental if you're going to remunerate people in crypto. What are your thoughts, Daniel? How's that going in Singapore for you?
Yeah, I agree. There was a huge wave of crypto coming in. Singapore was positioned as the crypto capital of the world come in. But ever since then, it's becoming tightened again. So to be able to perform crypto, like even Binance was kicked out of crypto, and they were doing very well. So we have a lot of every day, the people contacting us doing crypto, they're always super dodgy. And I think it goes back to the transparency. They're based in the Cayman Islands. They have a African passport. They don't want to show their face on a video call. So compliance wise, it's a nightmare. But yeah, as an employee trusting a crypto company, and I was just speaking to another contact who left a HubSpot to join a crypto Web3 company, was made redundant with the crash, and now has to find a visa to stay in Singapore within the next 30 days. Again, she had no idea that this was about to happen. Just suddenly her security was gone overnight. And so it has real life implications. And again, maybe she was promised equity in that business because it was a startup compared to security of HubSpot, which is a bigger company. But again, as you said, Leesa, maybe that's all disappeared overnight. So again, I think you need to take it with a risk, with a risk appetite. There is reward in risk, but at the moment, with the unregulated nature and still kind of sketchiness, you really need to be sure that it's the right risk you want to take at the stage of life that you're in. I think if you're a bit younger and you can go back to backpacking, then that's okay. But if you're relying on that for your family, then that's a different story.
I'm happy to admit I'm 45 and it doesn't make sense to me, so I won't be going near it.
I spent quite a bit of time doing it in 2017, 2018, and I did learn a lot, and I feel like I kind of know what to watch for the time being, and I'm just keeping an eye on things. And but in countries like Australia and Singapore, it's super challenging.
Well, I just tried to open a new company on Sleek this week, and I just couldn't believe the level of regulatory tightening on just opening my company from a crypto perspective, because I use the word trading in my new entity name. And yeah, I just think that the overarching implications for all of us to move quickly or slowly underpin that. So
awesome. Just and we've got about 5 minutes left, so we've got some more topics that we can run through, but I'm also really keen if anyone does have any particular questions they want to cover off before we close off, that'd be great. Already got one here. A few weeks I run the US, have a new deal. I run startups getting global investments, so it sounds like, yeah, some change in the geopolitical landscape again, with opportunities opening up in Iran. That's great to see. Are there any other comments or any other things that anyone on the panel wanted to actually cover off before we wrap up?
You're on mute, sorry, Leesa.
I just want to flag the point of geopolitics, because it's the big animal in the room that no one wants to talk about, but I think it's important very practically to talk about it. How do you see that impacting your ability to execute? And I'll throw that over to you, Jace, first of all, because I lived through one of my founder experiences where we took Chinese money and we took American money on the same cap table, and we lived just to tell the story on the other side. But I wouldn't recommend that to anybody. What's your experiences, and how should we be looking at it as this kind of Russia-Ukraine thing doesn't seem to subside?
Yes, so we've been relatively, I suppose, separated from that as a company at Cake. You know, we're like most companies looking to our current cap table for the funding for the foreseeable future. And, you know, so we haven't had to be super widely, I guess, marketed. We haven't had any interactions with countries that would be deemed to be complex, thankfully. And so, you know, from a platform perspective, we have occasionally had some partners that have highlighted some countries where we shouldn't be operating or you know, needed to be very mindful of. So I think people would know the ones. I'm not really prepared to sort of name them all, but certainly there are in capital flows globally. There's a lot goes on behind the scenes with regard to you know, where funding comes from, and we're fortunate to be outside of the sort of KYC AML framework, which protects us a lot. Yeah, I think it's we're pretty lucky at the moment at Cake. Honestly, we haven't been as impacted.
Awesome. I just had a question here. Does the IP protection aspect of employment change across multiple jurisdictions? Maybe that's one for you, Bevan. Sorry, you're on mute, Bevan. Bevan, you're on mute, sorry.
Had to happen. Yeah, happy to answer that. I suppose, you know, from what we say here at Deel is your IP is safe with us, without getting into the, you know, the complexities of IP, data securities, data sovereignty, and everything else. we obviously look to protect contractors and employees' data. So our approach basically ensures that we have sort of that complete control over the team's IP intervention rights without navigating through the complexities of global IP. So we sort of do help mitigate that complexity, if that sort of answers the question without going into it too much.
Okay. And just also for some context, we had the question asked about Sleek and answered in the questions there about the offices that you're operating across Singapore, UK, Australia, Hong Kong. Daniel, if you're incorporated in multiple countries, I don't know if you've got a perspective on that one as well.
Yeah, like for us, we started Singapore, we launched Hong Kong, we set up an organic office in Sydney. We've got 6 people, 200 clients since launching in January. We acquired 2 companies in the UK. One did company setups, one did accounting. We merged them both together. They'd set up 450,000 companies in the last 20 years. So quite amazing. And then for all other markets, we work with partners who we try and find are aligned to us and just being transparent, digital. But the difficulty thing is in setting up companies, countries still have a lot of paper involved. So I think the markets we try and go to are the common law countries where there's a requirement to have a director, corpsec, all the services we provide, because it's value add. Otherwise, if there's no value adding, there's no point in being there. And also it's the complexity of the market. So yeah, if anyone's interested in any country, if it's the one we're in, we can assist. But if there's any other markets, then of course we have a lot of clients that use us that then say, hey, you guys were so great. Do you have a contact in Canada, Philippines, Thailand? And these markets, we do have good partners that are probably not the same as what we're doing, because again, we consider ourselves quite unique, but they're aligned a little bit in terms of at least the values of being transparent. And I think as a founder setting up a company, the most annoying thing is going to one person, they tell you 10,000, you go to another person, they tell you 5,000. It's the exact same thing. Why is there such a big difference in cost? So I think for me and for our clients, the main thing is just knowing what is the cost and what do you get from that cost.
Thanks, Daniel. We're out of time, so thank you very much for everyone joining the panel discussion today. Thank you so much for the panel, for giving up your time, particularly for Leesa. I think it must be like 4 a.m. Now in Luxembourg. So we're very privileged to have such an amazing group, as to be able to share your own experiences working in your own global organizations, but also all the awesome work that you do with startups as well. We will be sending out some information post the event, which will have contact details for everyone on here. If you want to actually follow up, I'm sure they're more than actually happy to actually talk to you post the event. So thanks again, and really appreciate your time. See you later, everyone.